Welcome to your daily stock market summary from MarketSnap. Hey everyone, I'm thrilled to dive into today's market action with you. We've got a packed day with some wild moves in tech, big earnings surprises, and broader economic signals that every long-term investor needs to keep an eye on. So let's break it down and see what's driving the markets on January 29th, 2026, and how it fits into our wealth-building journey. First up, let's talk indexes. It's a mixed bag out there today. The Dow Jones managed to edge up slightly, showing a bit of resilience in the face of broader uncertainty. Meanwhile, the Nasdaq took a hit, dropping nearly 0.75%, largely dragged down by some heavy losses in the tech space. The S&P 500 also slipped a tad, reflecting the uneven sentiment across sectors. And for those tracking volatility, the VIX spiked over 3%, signaling some jitters among investors. For us long-term folks, these daily swings are noise, but they remind us to stay vigilant about where the market's heading over the next few months. Speaking of tech, let's zoom into the big losers today, and it's a rough day for software stocks. Microsoft led the decline with a nearly 10% drop after reporting slower cloud growth, spooking investors despite its massive market presence. Other software names like SAP and ServiceNow also got hammered, with double-digit percentage losses as the sector officially entered bear market territory. This widening gap between software and hot chip stocks is something to watch. Short-term pain could mean long-term buying opportunities if you're patient and believe in the fundamentals of these giants. On the flip side, we've got some standout performers lifting spirits. Meta Platforms soared over 10%, riding high on strong earnings and optimism around AI-driven growth. MasterCard and IBM also posted solid gains, showing strength in financials and legacy tech. And check out Royal Caribbean Cruises, skyrocketing nearly 19%, a clear sign that consumer discretionary spending in travel isn't slowing down just yet. For long-term investors, these winners highlight the importance of diversification across sectors, especially when tech takes a breather. Now, let's look at the market movers shaking things up. Nvidia and Apple held steady with modest gains, continuing to be heavyweights in driving market sentiment. But Tesla slipped over 3%, reflecting ongoing concerns about EV demand and a pivot toward robotics. Palantir also dipped, despite its strong yearly performance. These names are the pulse of the market right now, and as long-term players, we need to think about how their strategic shifts, like Tesla's robotics focus, could redefine growth over the next decade. Turning to the most active stocks by volume, Nvidia and Microsoft dominated trading activity, no surprise given their size and the day's news. Intel and smaller names like Joby Aviation also saw heavy action, with Joby taking a steep 16% dive on dilution concerns from a new stock offering. High volume often means high emotion, so for us, it's a reminder to step back and focus on the bigger picture rather than chasing the daily frenzy. On the economic front, there's a lot to unpack. The Federal Reserve held interest rates steady, as expected, but the real buzz is around President Trump's vocal push for lower rates and his upcoming Fed chair pick. Markets are shrugging off the drama for now, but a weakening dollar, hitting near four-year lows, could spell trouble with inflation risks down the road. Plus, jobless claims dipped slightly to 209,000, signaling a still resilient labor market despite worker unease. For long-term investors, this mix of policy uncertainty and economic stability means staying nimble. Rate cuts might not come soon, so plan your portfolio with a range of scenarios in mind. Let's shift gears to earnings, because it's a big week for corporate results. Heavyweights like Apple, Intel, Visa, and MasterCard are reporting, and we've already seen some fireworks. Meta's blowout quarter pushed its stock way up, while Microsoft's miss sent it tumbling. Southwest Airlines also crushed it, jumping nearly 19% on strong results and a bold move to assigned seating. Caterpillar and Comcast beat expectations too, showing strength in industrials and media. Looking ahead, keep an eye on ExxonMobil and Chevron as energy remains a hot topic. For us long-term investors, earnings season is a goldmine of insight. Use these reports to gauge sector health and spot trends that could shape your holdings over years, not just quarters.
Get exclusive AI summaries of every earnings call. No more reading hours of transcripts. Access revenue segmentation, 5-year analyst estimates, SWOT analyses, and full financial statements. Plus, track upcoming earnings, dividends, and market events with MarketSnap's calendar app. Create a free account at MarketSnap.com.
Peeking at the past week's top large-cap gainers, Seagate Technology led with a massive 28% surge, fueled by strong demand in data storage. Celestica and Western Digital also posted double-digit gains, riding the tech hardware wave. These short-term pops are exciting, but for our long-term strategy, they're a cue to research whether these gains are backed by sustainable growth or just market hype. On the weekly losers list, United Health Group dropped a hefty 17%, hit by sector-wide healthcare concerns. Carvana and Symbotic also saw significant declines, reflecting volatility in consumer and automation spaces. These dips can sting, but they're also a reminder to reassess your exposure. Sometimes a pullback is just the entry point you've been waiting for if the fundamentals hold up. Sector-wise, over the past week, industrials and energy managed small gains, showing some defensive strength. Basic materials also edged up, benefiting from commodity momentum. These sectors might not be the flashiest, but for long-term portfolios, they offer stability when tech and consumer stocks wobble. On the flip side, healthcare took the hardest hit, down over 2%, followed by consumer defensive and real estate. These lagging sectors highlight where caution is warranted in the near term, though for us, they could signal contrarian plays if you've got a multi-year horizon and believe in a rebound.
MarketSnap brings everything long-term investors use daily into one clean, fast platform. Explore stock financials, SWOT analysis, valuation ratios, 5-year analyst estimates, and our intrinsic value calculator, built with real fundamentals, not hype. All in a layout that's simple to read and ridiculously fast to navigate. And when you want to talk investing, join Nexus, our community where investors share valuations, posts, and stock discussions, all connected directly to the data. Use our stock's intrinsic value calculator to run and save real valuations with no spreadsheets. Share your analysis and valuations with others in the Nexus community. Get daily market summaries in video, audio, and article formats. Track the market with our earnings, dividend, and economics calendar. Our homepage gives you a real-time market overview with interactive heat maps, top market movers, and major index performance at a glance. Track daily performances, discover the most active stocks, and analyze performance across different timeframes, from weekly to yearly trends, and see which industries are leading or lagging. It's free to create an account, with optional access to premium forward-looking data. Try it now at MarketSnap.com and invest with clarity, not noise. That's a wrap for today's stock market summary from MarketSnap. Thanks for tuning in, and make sure to stick with us for daily updates and deep dive SWOT analyses to keep your investment strategy sharp. Whether you're navigating short-term turbulence or building wealth for the long haul, we've got the insights to help. See you tomorrow.